Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and in today's video, we're going to be going over the top 10 best stocks to buy right now. In the first article we will be analyzing, we're going to be going over the 5 best bargain stocks to buy right now, and then in the later article, we're going to be going over the top 5 safest stocks to buy right now, and these stocks are the same types of companies that hedge funds and smart money are buying at this time, despite negative macroeconomic factors. So for more videos on the best stocks to buy right now, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. The first company we're going to be talking about is Ford Motors, ticker symbol F. Right now, the current stock price for this company trades at $13 per share, and it offers a dividend yield to their investors of 3.37. If you're not familiar with this company, Ford Motors, ticker symbol F, is an American multinational automobile manufacturer which not only produces various automobiles, but they offer various segments in that particular market, such as commercial vehicles as well as luxury vehicles. Analysts believe that the company is fairly valued, with the low-end price target for this company coming in at $10 and the high-end price target coming in at $28 per share. So why is this company on our list? The reason for this is because of Ford's electrification of their various vehicles, as well as their new creations such as Ford Blue and the Ford Model E. They anticipate that these particular vehicles will boost the company further in profitability throughout now until 2027, so clearly they have a very good, strong trajectory right now, but for me personally, I will not be buying Ford anytime soon. The next company we're going to look at is one of my favorite companies, which is Micron Technology Inc., ticker symbol MU. This company currently trades at $54 while offering its investors a dividend yield of 0.79. Micron Technologies Inc., ticker symbol MU, is an American producer of computer memory and computer storage technology, which would include their dynamic random access memory, also known as DRAM or DRAM, as well as various flash memory devices or USB flash drives. An analyst from Loop Capital recently initiated coverage on Micron Technologies, and they gave this company a price target of $70, which means that the current stock price is a good buying opportunity as of right now. The analyst also went on to say that the memory industry offers a very good risk-to-reward ratio when determining certain companies to invest into right now, despite negative macroeconomic factors that are in the economy right now. And he also believes that this company will start to pick up in their overall revenues from 2024 onwards, so you better get the company cheap right now at only $54 before it absolutely takes off, and I personally am invested into Micron Technology. The next company we're going to be dissecting is Booking Holdings Inc., ticker symbol BKNG, which trades for $1,862 per share. Now, if your brokerage allows you to invest into share slices or fractional shares, you don't need to buy an entire share of this company, which is worth $1,862. You could literally invest as little as $1 into this company if your brokerage or financial institution allows you to invest fractionally or in share slices for particular companies. And if your brokerage doesn't offer that, I would highly recommend you look into some brokerages that do offer that. If you're not familiar with this company, Booking Holdings Inc., ticker symbol BKNG, is an American travel technology company, and recently a Truist analyst lowered their price target for this company from $2,600 down to $2,500. But clearly $2,500 is substantially higher than the stock's current price, so we could safely say that this company could be undervalued according to some metrics. So if you haven't looked or done your own research into this company, I would highly recommend that. The next company we have on our list is a company that I, again, personally own, which is PayPal Holdings Inc., ticker symbol PYPL, and I really don't understand why this particular stock is falling in its stock price, but it's trading at a phenomenal discount. The current share price trades for $82 per share, and this company is an American multinational financial technology company that operates and facilitates various online payments because it has a huge online payments system, and its technology allows it to be the mediator for the transport of online money transfers. I'd also want to mention that an analyst from Atlantic Equities recently lowered the price price target on PayPal Holdings Inc. from $120 down to $110 while maintaining an overweight rating, which is positive that he maintained that particular rating. Now, even if we take the lower end price target of $110, clearly the company is undervalued, but it gets even better, because despite the current macroeconomic downturn that we are experiencing in the market right now, the future forecasts of this company are absolutely phenomenal. For instance, the market cap for this company is set to triple by 2030, and if that's true, buying the company right now is going to be a huge proponent in building wealth over the long term, particularly if you're a long-term investor like me. I'd also want to bring to your attention that the current leadership of the company is phenomenal. The company is also wanting and looking at various acquisitions that they could do on top of buyback programs where they're going to buy back their shares, and they can do this because of their strong cash position, because this company is fundamentally solid on top of having absolutely amazing cash on their balance sheet. So overall, PayPal is a very attractive buying opportunity for long-term investors that is safe with limited downside because the stock price has already cooled off pretty substantially. The next company we're going to talk about is Meta Platforms, another company that has cooled off dramatically recently, falling down to just $93 per share. And again, I also own Meta Platforms because this is a cash cow company. Meta Platforms, formerly known as Facebook, is an American multinational technology company which owns a plethora of various social media sites like Facebook, Instagram, WhatsApp, and many other apps, products, services, and technologies. Recently, an MKM Partners analyst lowered their price target on Meta Platforms from $195 down to $140, but they maintained and retained a buy rating on these shares. With Meta's future growth projections as well as their trajectory, this is a very impressive company that is not only growing their overall user base, but also the overall engagement on their platform, which allows them to make a load of revenue. So overall, I think the next year or two could be dicey for both Meta Platforms and PayPal, but overall, these companies are set to explode because they are fundamentally solid and relatively low risk because the companies have already lost so much value due to negative macroeconomic factors, thus making them trade at a huge discount, which gives me a fantastic buying opportunity for these companies. The next company we have on our list is AbbVie Inc., ticker symbol ABBV. This company is mainly known for their dividend because they do offer their investors a giant dividend yield of 3.85 and a current stock price of $146. This company is a Chicago-based company in the United States that was a spin-off of Abbott Laboratories, ticker symbol ABT, and I personally own both AbbVie as well as Abbott Laboratories, ticker symbol ABT, because both of these companies are phenomenal. If you're not already familiar with this fantastic dividend-yielding company, AbbVie is a dividend king where they have increased their annual dividend for the last 50 years in a row. On top of that, Morgan Stanley is very positive on this company to where one of their analysts have kept and maintained an overweight rating for this company and a price target of $185, thus signaling to investors that this company is trading at a huge discount right now. And if you haven't done research on this company, go ahead and do that. But if you don't think the company's growth is very intriguing, at least the dividend is absolutely phenomenal. The next company we're going to talk about is another very strong dividend-yielding company coming in at a 2.52 dividend yield and a share price of $173, and that is none other than Johnson & Johnson, ticker symbol J&J. Johnson & Johnson specializes in a multitude of areas such as medical devices, pharmaceuticals, consumer products, and many other business segments. Despite macroeconomic pressure, this is one of the more stable companies that you could buy on the stock market right now, considering their strong dividend and their overall history. Recently, a Bernstein analyst lowered their price target for Johnson & Johnson by only $4 from $194 down to $190. But he did say that the company is anticipated to give investors at least a market performance on top of giving investors fantastic cash flow through their strong dividend. Johnson & Johnson is another dividend king, and they have increased their dividend for the last 60 years consecutively, making this company one of the best best stable companies to buy right now, and this is a company that smart money is buying right now. Hedge funds and smart money are buying companies like AbbVie and Johnson & Johnson, not only for their stock price appreciation, but because of the cash flow that they obtain from their dividends, which comes in handy during times while the stock market is crashing. The next company we're going to look at is Apple Inc., ticker symbol AAPL, and if you're not familiar with Apple, Apple is one of the most innovative companies in the entire world, which currently trades at $148 per share, and they offer their investors a dividend yield of 0.59. Morgan Stanley also recently chimed in on this company due to one of their analysts saying that this company has an overweight rating, which is positive, that's a buy rating, and they also have a price target for Apple shares over the next 12 months of $177, again indicating that the current stock price is undervalued and investors should look further into this company if they believe it's a buying opportunity. Despite headwinds that this company is facing, they have performed very well overall, and I anticipate Apple is going to be a strong company from now over the next 20 years, making it one of the best investments on the stock market. We also have companies like Visa, another very strong blue chip company that smart money is buying, ticker symbol V, which currently trades at $205 per share while offering a dividend yield of 0.72. Visa is a leading payment solutions provider, and their various services are used by consumers, customers, businesses, as well as governments across the entire world. Right now, we have price targets on the company that range anywhere from $185 on the low end to $290 on the high end, but overall, this company is primed for future growth. Lastly, we have one of my all-time favorite companies, which is Alphabet Inc., ticker symbol GOOG or GOOGL. Alphabet is the parent company of Google, and they also own YouTube, and in my opinion, one of the best companies to buy right now. The current share price is trading at only $90 per share, while professionals and experts in this space believe the company should be worth at minimum at $93 or at maximum $169 over the next year. Just like Apple, this company does face near-term headwinds. However, the company is stable, has loads of money, great cash flow, and the overall position of this company is set for long-term growth, which provides you the opportunity to build your wealth in this particular company over the long term. So these are very safe companies that smart money is buying, and we also went over companies that are trading at a huge discount right now, which still have a lot of growth left in them if you're willing to hold these companies for the long term. If you want more videos like this one, go and smash the like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.